Even those whose salary is 20,000 rupees can earn 10 million rupees. How is that possible? It's 2018. Two friends named David and Chetan were standing at the bus stand waiting for their bus. While waiting for the bus, they were both discussing an incident that happened with their common friend. Ratanlal, who was a bit older than him, but also worked in the same office, so he knew both David and Chetan very well. Ratanlal got married to his daughter recently. Ratanlal did not have much wealth, so he married off his daughter by borrowing money and pledging some of his jewels. Ratanlal's salary was not that special. 80% of her salary is spent on household expenses. The remaining money was not enough to repay the loan. So all he could pay was the interest on the loan taken in friends. In the world of finance, this is called a debt trap. The money that Ratanlal had borrowed was compounded annually with interest also increasing. Years passed like this. Ratanlal used to collect his salary, pay the money back home and use the rest to pay interest. After some time, the interest rate increased so much that he could not even meet the household expenses. Now those who had given money to Ratanlal also started to think that Ratanlal would not be able to return their money. That's why they keep applying pressure. Eventually Ratanlal was in so much debt that he had to sell his house to pay off all the debts. David and Chetan are very disturbed by this incident. David said, "Brother, if you see, we are also doing a job of only 20,000 rupees. Our children are also growing up slowly. After some years when we have to marry them, we may be in the same situation. What do we have other than this job? We don't even have our own house which we can sell to repay the loan." Both take the matter seriously and both approach their common friend Nikul before going to their respective homes. Nikul is a financial advisor. He doesn't do any work. He simply picks good stocks and invests in them and then enjoys his life with the dividends that come from them and the rates on his property. When Nikul listens to both of them, he asks them to invest in mutual funds. You don't need any investment knowledge for this and start with 5,000 rupees per month. Otherwise, keep increasing your investment gradually by 10%. Friends, before starting the video, I want to give you a small information that nowhere in this video it is said that the money you earn in 1 year and you will invest somewhere what you will learn in this video today. But you may not understand anything in 2 years, but yes, if you follow this plan with long-term investment mind, then this video is 100% useful for you, so video is going to be most important. So keep watching the video until the end, and if you are new to the channel, subscribe to the channel and stay by. Nikul told David and Chetan about 3 types of mutual funds and asked them to invest in these 3 as much as they could risk. For information, let me tell you that these 3 mutual funds are large cap, mid cap and small cap funds. Now what are these? For now, let me tell you that large cap mutual funds give an average return of 10 to 12%. Mid cap funds give 12–15% returns, but the risk is slightly higher, and small cap funds give 15 to 18% returns and risk is higher than the other 2. Because small cap companies are not dual established companies, there are ups and downs in them. After David came home, he started analyzing many mutual funds and selected 3 funds and made a portfolio in which he invested 50% of his 5,000 rupees in large cap funds, 30% in mid cap and 20% in small cap. With this, his annual average return will be equal to 14%. Now he started doing this every month in this portfolio. Chetan, on the other hand, wanted to take more risk because he wanted more returns, so he invested 40% of his 5,000 rupees in small caps, 30% in mid caps and 30% in large caps, making his average return equal to 15.30%. All the calculations we see now are based on our average income only. We have calculated keeping in mind 10% investment growth per year and 6% inflation in India. So let's see how much profit or loss is both after 10 years. After 10 years, David's portfolio has appreciated 1,882,000, which, if inflation is taken into account, becomes 1,051,000 rupees, i.e. the 1,800,000 rupees that David will receive 10 years from today is 1,050,000 rupees today. Now you ask, brother David, when will you get 10 million rupees? So according to the calculation, after 20 years David will have 12,900,000 rupees in his bank account if he continues his investment. And friends, this is the power of compounding and investing. What was just 1,800,000 rupees in the first 10 years became 10 million rupees in the next 10 years, and not only that, David continued to invest for 5 more years. If he keeps this money, then his money will be from 10 million to 30 million rupees. Now let's look at Chetan's investment. Because Chetan invested more in small caps, he got higher returns than David. Chetan's portfolio will be worth 2 million rupees in next 10 years, which is worth 1,100,000 rupees today. Now Chetan will get 10 million rupees less. Chetan will also be included in the list of 10 million rupees after 20 years, but after 20 years his total amount in his bank account will be 15 million rupees, which will be another 20 million rupees. Then David, in this whole difference you can only benefit by making small changes in your investment. And if Chetan continues his investment for 5 more years, this 15 million rupees will become 37 million rupees, which is directly 7 million rupees more than David's. In this we would not call David's investment a mistake. David will also get very good returns over time, and since David has invested more in large caps, he will face less volatility. Where it can be seen more in conscious investment and risk-taking is in your hands, how much risk you want to take. So guys, I want to clear 2 things from this story that we learn. Mutual funds are the easiest way to invest, and one can start with less money, but which mutual fund you choose, it is entirely up to you. Second, as we have seen, the more we invest, the more we benefit from compounding. So if you want to invest, my advice is you should do it for at least 10 years, because Warren Buffett also said if you don't think about holding an investment for 10 years, then don't think about holding it for 10 minutes. Hope I was able to teach you something from today's video. So if you like the video, like it and share it with your friends. See you again in the next video. Till then, stay healthy.